Assalamualaikum warahmatullahi wabarakatuh. So today we will present our group assignment regarding the 5 questions. So this is our team.
My name is AFIFAH BINTI AZMI. My metric number is 1202381. Today I will present about question 1, which is segment disclosure are widely regarded as some of the most useful disclosures in financial statement because of the extent to which they disaggregate financial information into meaningful and often revealing grouping. Discuss this exhortation by reference to the objective of financial reporting by segment. Financial reporting goal is to tell investor and creditor about a company most essential operating division. It allows viewer of financial statement to gain a better understanding of the volatility that may affect the overall figure for each segment. Stakeholder can examine similar reports to see if they are reliable. While an operating segment is a business segment that engage in activities that generate revenue and incur expenses. If two or more segments have identical product, services, processes, clients, distribution channel, and regulatory environments, they must combine their finding. Report a segment if it accounts for at least 10% of the revenue, a portion of the profit or loss, or 10% of the entity's total asset. If the total revenue of the segment has chosen based on the previous criteria is less than 75% of the entity's total revenue, add extra segment until users achieve that amount. This is because analysts, potential investor, and other stakeholders require comprehensive data to analyze the company long-term viability and growth, as well as to monitor management performance. For example, if a company revenue is much higher than planned, segments reporting might reveal where the money is coming from. That's all from me. Thank you.
Now I will explain about the question 2. Benefits that can be sought by an entity after obtains control over another entity. Firstly, it will increase the market share. When two entities combine, it will create synergy, and the synergy will result in gaining a competitive edge, will benefit it to outperform its competitor. Secondly, the entity will gain better resources and competencies. When there are two entities being combined, the entity will be larger. A large entity will have a better technology, will employ experienced and qualified talents, and of course will have a better practices than before. And lastly, better access capital. When with virtual agreement between the two entities, there is availability and accessibility of higher funding and capital.
Assalamualaikum warahmatullahi wabarakatuh. My name is Aina RUSMADI and my metric number is 1202379. So today I would like to explain about question 3 regarding the importance to identify transactions as current or previous period transaction. Okay, so the identification of transaction that make up a bookkeeping event is where an organization accounting cycle starts. So this could be a sale, a refund, or a payment to a vendor, among other things. So the modifications applied for those transactions may be improper if the transactions are not accurately in time context. Okay, so transactions in the current period have an impact on accounts that were not affected in previous periods. For example, current period inventory sales have an impact on sales and cost of sale account, whereas previous period inventory sales have an impact on retained earning. So this is important to identify the transaction as current or previous period transaction to make sure that the amount is not misplaced.
Assalamualaikum warahmatullahi wabarakatuh. My name is NURZULFA binti Muhammad FAZLI. My metric number is 1202385. So today I will present the fourth question, which is the purpose of translating financial statement from one currency to another currency. So basically, currency translation is the process of converting one currency into another, typically in the context of a parent's company foreign subsidiaries financial result into the functional currency, so which is the currency of the primary economic environment in which an entity generates and expends the cash flow. Okay, so what is the purpose of translating financial statement into to another currency? So the first purpose is to allow a company with foreign operation or subsidiaries to reconcile all its financial statement in terms of its local or fractional currency. So it used the exchange rate at the end of the reported period for assets and liabilities, the exchange rate on the date at that income or expense was recognized for the income statement, and her historical exchange rate at the date of entry to shareholder entity. So, if a company has multiple operations in different countries, the company will use the different currency for its business operation. So, still from an accounting standpoint, financial statement should be presented in a single currency, which necessitates foreign currency translation. If more than one currency is used, this currency translation process analysis financial statement better, otherwise it makes the analysis difficult. For example, in the fiscal quarter ending 26 December 2020, international sales accounted for 64% of Apple revenue. So the negative impact of a rising US dollar has been a recurring theme for Apple and other large multinational in recent years. When the US dollar strengthened against other currencies, it weighed on international financial figures once converted into US dollar. So, Apple, for example, seeks to mitigate adverse fluctuation in foreign exchange rate by hedging their currency exposure. For foreign exchange, which is we call forex derivatives, such as futures contracts and options, are purchased to allow business to lock in a currency rate and ensure that it remains constant over a given time period.
Okay, so I will continue question number 5, which is why do a company need to disclose related party transaction? Okay, so if a party is directly or indirectly associated to an entity through one or more intermediaries, it is considered related. So the entity is then controlled by or under common control with the party, which include parents, subsidiary, and fellow subsidiaries. Okay, so a party is related to an entity if they have a stake in it that provides them significant control over it, or if they have shared control over it. So, why are related party transactions required to be disclosed by a company? Okay, it is because whether they have been transaction between the connected parties, the relationship between the parents and subsidiaries must be stated. Okay, so the parent and if different, the ultimate controlling party of an entity must be disclosed. If neither the entity's parent nor the ultimate controlling party provide publicly available financial statements, the name of the next most senior parent who does must be revealed. Okay, so it is appropriate to disclose the related party relationship when control exists, regardless of whether there have been transaction between the related parties, to allow users of financial statements to form an opinion regarding the implication of related party transaction on an entity. So that's all from us. Thank you.